A few weeks ago, I bought shares of ExxonMobil, and they're already down over 30%. Most of the other stocks in my portfolio are down as well, although I'm not worried. Sure, the coronavirus is very concerning, and there will be a coming recession, but once again, I'm not worried. On the contrary, I'm excited to find even better buying opportunities. I've saved for a rainy day, more like a rainy few years, and have close to 50% of my wealth in cash. I recently let some short-term treasuries mature. So if the market continues to drop, I'll put close to 100% of my total wealth, minus my emergency fund, in stocks. Now, I might make handling a stock market crash sound easy, but it's anything but that for most people. And I admit, it's still a bit challenging for me. It's not fun watching my portfolio of stocks tank. It's hard-earned money disappearing on paper. So last week, I took a break from the constant headlines. Most of them lead to overreactions and herd investing. So I took a vacation from the news, work, and even living in Baltimore. I ended up visiting my parents out in the Black Hills, not far from Mount Rushmore. While the markets were tanking, I was skiing with my dad. He's still a pro on the slopes. It was great catching up with my parents, and this helped me reset. While traveling, I also took a break from writing and picked up my favorite book, Ender's Game. It's been a while since I've read it, and I made it through all 400 plus pages, which is quite the accomplishment since I'm a slow reader. It's a great story, and I might do a book review soon. There are some great lessons hidden within the book. But overall, taking a break and stepping back from the headlines helps put things in perspective. As the saying goes, it's better to follow the trend lines, not the headlines. And since I'm a long-term investor, I can easily wait out short-term panics and bear markets. In 3, 5, 10 years from today, the stock market is going to be reaching higher highs. And I'll be along for the ride. Now, no one knows how much longer the stock market crash will last or how much further it will go. So to take advantage of the stock market crash, I'm dollar cost averaging in. As I mentioned, I invested close to 10% of my savings in Exxon earlier this month. Now this week, I'll likely put another 10 to 20% into the stock market. If stocks stay in bear market territory, I'll put almost all of my savings into great companies that trade at deep discounts. These businesses can easily recover from the 2020 market crash, and many of them will emerge stronger following the recession. A few of the companies on my watch list are, ExxonMobil, I might double down, Wells Fargo, Walgreen Boots Alliance, Archer Daniels Midland, 3M, Emerson Electric. There are many other stocks that I'm tracking, and if I end up buying into any of these businesses, I'll let you know. Overall, I'm excited to find even better buying opportunities. Trying to time the market bottom is near impossible. Instead, easing into stocks over time has led to higher long-term returns. And once I'm close to 100% in stocks, I'll reinvest dividends and other saved income in a more systematic approach. Every quarter or 6 months, I'll let cash pile up, and then I'll put it into whatever I find to be the best value opportunities at those times. Handling a stock market crash isn't easy, and I hope sharing how I'm surviving a bear market helps you. It's good to step back from the panic-stricken market and the rough headlines. Instead, to put things in perspective, use history as a guide. Try avoiding the news fodder of the day, and as always, play the long game. That's where the real money is made. This was just a quick update today. I appreciate it that you stopped by and would appreciate if you just tap the like button down below as well as subscribe to my channel. And as always, let me know if you have any questions. I love any feedback. These times are tough, but long term we'll be in a better place.